Jayesh Mehta is now with us from Bank of America Merrill Lynch. Jayesh, what do you make of this news flow? Is it something which is needed, needs to be discussed and get going?
So I think basically it needs to be split out in two situations. A is pure liquidity. Second is about the credit awareness or credit risk. Right? I think people are generalizing it and trying to make it as one. So definitely there are two things. We need to be overall, not only NBFC, overall, when your interest rates, when you cut interest rates, you need to have liquidity surplus for a sustainable period of time. Even after two rate cuts right now, we are still 35,000 crores negative on a systemic liquidity basis, which should have been at least 75 to 80,000 crores positive liquidity. And even in past, we have done something like that in Jan 15 to March 2016, even though we cut, five times rate, 125 basis point, the transmission didn't happen because, March 16, we had 230,000 crore systemic shortfall in liquidity. So I think that stance RBI needs to agree, and if they agree, they know many methods how to get it done. So once they agree to the stance that yes, when they are cutting the rates, they need to be 80,000 crores surplus, or when they are raising the rates, they need to be 80,000 crores negative. And then that 80 has to be plus minus 20. It cannot swing from 80 to 2 lakh or 3 lakh crores and kind of situation. It needs to be monitored on a fortnightly basis. So that's one part of it. Now coming to NBFC, where there is some NBFCs have credit issue, not all NBFCs have credit issue. For that, some relief if people are talking about it, and actually, the lenders will decide. People have been trying to say, in fact, your own statement right now said it will not be directly from RBI. So that is what it was. So if you look at it in history, it was done in 2008, where RBI had given some liquidity to mutual fund for redemption against nationalized bank CD. But nobody used it because that confidence itself brought down the CD prices down, and it got the credit confidence back into the system. And secondly, of course, by Jan 2009, they had worked out a structure where, there would be an SPV, which would be guaranteed by Government of India, and RBI lends to that SPV, and that SPV would buy, and it's a government credit risk, that would buy the NBFC's paper or something like that. But I think let's do the first step first is, I think, get the liquidity back. Second is, I think, incentivize banks to lend. So even when you had 11 banks as PCA, there were only 17 banks were not lending. And now you have 5 banks as PCA, but that's 5 banks as PCA. I think that lending culture, the fear, I think that's all needs to get restored. We cannot run economy only on NBFCs. We need to be having bank-led credit growth to support economy.
With windows like this or provisions like this from the RBI, could it really give that new lease of life to financial institutions? What are some issues at this point of time, according to you, that they have to address in order to once again bring back the adequate amount of liquidity into the market?
So I think first is the systemic liquidity is not specifically to NBFC. I think it's overall systemic liquidity. I think, of course, some of them will come back. That's more technical, what comes back and what goes out. So right now, because of election, government has not been spending. Once they start spending, 150,000 crores will come back into the system. But it is actually, firstly, RBI needs to get convinced that should it be having negative liquidity, even marginal, or when they are cutting rate, they should have at least 0.5% plus of NDTL as positive liquidity. Once they are convinced, we don't need to say anything. They have enough tools to do that. That's one part. As far as NBFC is concerned, since the credit confidence has gone up, there's some support required. NBFCs also need long-term financing because most of their assets, even though some of them are very well collateralized, but it's illiquid assets. So they need long-term financing. And that, once you have surplus liquidity, the credit risk appetite slowly starts building in, and people will automatically come and take the credit risk. But yes, even if that does not help, maybe an immediate shot, you can get some institutions to focus lending on housing and stuff like that, which is what you were talking about, NHB and other things.
Right, Jayesh. Thanks so much for taking out time for us.